Hi, this is Ian Coleman from Signal Centre. This is the FX video report going into the week 17th of June 2019. Crucial day for the dollar. Uh, let's just have a look at a few time frames. We've got the weekly time frame. Here we can see a bearish Elliott wave count to the downside. Now we hit this trend line support and we've seen a correction higher. Quite a decent correction higher, but we have posted an insider army on the weekly chart. Now this formation is an ending wedge pattern that has an eventual bias to break to the downside. If we look to this time frame, and this is just showing a shorter time frame, the daily chart, then we've got this wedge pattern, another wedge pattern. Looks like 5 waves completed to the downside. That should dictate that this move higher is corrective. We've got some reverse trendline resistance at 97.81, and the reason we're highlighting that is because if we look at this time frame, this was our bespoke resistance last week, 97.45. We did clip it and get a close under it, but we've actually gapped higher today. So it's quite a crucial day for the dollar index. If we push or if we fail to close below 97.45, then like I said, we're looking at that reverse trendline resistance, which is at 97.81. So quite a pivotal level or moment at the moment. Looking at the economic calendar, there's little in the way of releases that could potentially turn the dollar around quickly. Maybe a tweet from Trump might do the trick later in the day. We've got RBA minutes on Tuesday, zoo survey from the Eurozone as well on Tuesday. Wednesday, we've got inflationary figures out of the UK, the CPI figures, and we've also got the inflationary figures from Canada that day. That's obviously later in the afternoon. And then we've got FOMC projections, the statement, interest rate decision on Wednesday. So obviously a big day for the dollar on Wednesday. Overnight on Thursday, we've got RBA's low speaking and the RBA bulletin. We've also got the Bank of Japan interest rate decision and their policy statement overnight Wednesday coming into Thursday morning. Then we've got the UK hike or not or unchanged rate decision, the asset purchase facility also at 12 o'clock UK time on Thursday, and then going into Friday we've got a lot of PMI figures, Canadian retail sales. So got quite a sort of busy docket this week. It's only today that we really lack anything in the way of scheduled economic releases. So what are we thinking? Let's look at some different time frames. We've got euro dollar. This is the daily time frame. It's broken that wedge formation to the upside. Measure move target 114.48. We've got bespoke resistance at 114.30. However, we have seen a decent correction move to the downside, posted a bearish outside day, and then we've had continued losses. Like I said, it's quite a critical point for the dollar and also for a lot of these major currency pairs. Now we're looking for a potential reverse head and shoulders to form here. So left shoulder, two heads or a double bottom formation, and then a right shoulder. We've got a 61.8% Fibonacci level located at 111.99. We've got our bespoke support located just under there at 111.95. So there is scope for some limited buying, selling. We are looking at buying into dips today and this week, really, in euro dollar. If we go to cable, and again quite a critical point for cable, if we go to a larger time frame, we basically reacted higher from this Fibonacci confluence area, so 78.6% pullback level and a 161.8% extension, posted a bullish outside day, but we failed to sustain that rally. We've seen a decent move lower. If we go to this shorter time frame, we've got a 161.8% extension level, 125.84. Then we've got a 261.8% extension level down here at 124.75. So quite a critical point. Is it going to form a bullish reverse head and shoulders similar to euro dollar? Left shoulder, head, right shoulder. We'll have to wait and see. We are looking at buying dips this morning. I think we're just about to get triggered actually. 125.80 is our trigger level. We've got to stop at 125.40 with a target at 126.60 today. Dollar Swiss, and again quite a critical point for this dollar major. 5 waves to the downside. Believe that we're now in a corrective formation higher. We did just push through our bespoke resistance on Friday. We've now got some bespoke resistance located here at 100.16. We've got a 38.2% Fibonacci pullback level at 1001, which is obviously very close to that big figure. So we're looking at limited upside pressure at least for today. We've got a short trade set at 100.16. Again, we could see some pretty choppy price action as we finish and complete what we believe will be an ABCD formation. Then we're looking for a head and shoulders pattern. So again, a head, left shoulder, right shoulder, and then the bearish move to the downside. Dollar yen, 9 days of mixed and volatile trading. That's quite common in corrective formations. We've got a swing low here, which is located at 109.02. What was support becomes resistance. We've got bespoke resistance located at 108.90. So again, we're looking for limited upside pressure in the dollar today. 107.60 is a 61.8% retracement level. 107.37 is a full AB equals CD formation target. Dollar CAD broke the wedge to the downside. Got a measured move target down here, 130.115. Similar to dollar Swiss, we clipped a short trade very late on Friday on that impulsive move to the upside. We're still looking for a move lower. We've got, if we go to this time frame, which is the intraday time frame, we've got 261.8% fib here, 134.22. Go to this time frame. We've got some bespoke resistance located at 134.19, so pretty close to the previous swing high. Again, we're being ambitious. We're looking for a move down towards that wedge target over the medium term. So it does, as far as we're concerned, hold quite a good setup for a day trade and a medium term trade today. Dollar CAD. Aussie dollar, quite an impulsive move to the downside. The reason that we're wary about continued losses for Aussie dollar, we've got previous swing low here, which is around about 68.65. We've also posted a DMARC 13 count on the daily chart. Now, DMARC 13 count normally highlights the end of a trend and the start of a new upward bias. So we do believe that further losses are going to be limited. We've got a 261.8% fib level located at 68.26. Our current signals are mixed. That's why we're looking at selling into much higher rallies today. 69.35 is our bespoke resistance, and we've obviously got a stop up here, which is below the previous swing low. So it was support, again should be resistance. So this being quite a decent zone to the upside, but like I say, quite a way off from current price levels. Euro sterling. Now we've seen again mixed volatile trading. Spikes in both directions for the last 3 trading days. Dips continue to find buyers. We've got no real clear indication that that's coming to an end. Today we've got some bespoke support located at 88.65. If we look over here, the previous swing high which again was resistance, should now become support, was located at 88.50 to 88.50, 88.65 is our support zone, if you like, today. Euro yen, and again, is this a 5-wave completion to the upside? Pretty disjointed wave pattern. We've got a 61.8% fib here at 121.69. We are seeing a little bit in the way of upward pressure. We posted a bullish outside candle. However, our indicators today show that rallies should be still sold into. 122.20 is our bespoke resistance. We're going to stop up here at 122.60. We're going to try and target this 78.6% extension level, which is at 121.29. Signals are not strong on euro yen because we could be going into what could be a larger third wave to the upside. Okay, I hope you've enjoyed that video analysis, and we'll be back soon with some more. Many thanks.